Hey Fools, I'm David Hanson today, joined by Fool contributor Jordan Wathen. Jordan, we're talking business development companies, BDCs. And Main Street Capital in particular, they have an asset management arm of the company here, but they have structured this a little bit different than most BDCs. Walk us through what this other management company is and kind of how that feeds into the broader company.
So really how it worked is kind of a recent development. They've done really well as a public company. I think they've started to get attention for that. And so they started partnering with Heinz Securities on a non-traded BDC. And so how it works is it's called the HMS Income Fund, and Heinz Securities will work to sell it. And then Main Street just basically acts as the investment advisor. So they don't have to worry about going out there and raising assets or anything like that. And so for managing it, they take 1% of assets and then 10% of the returns over 7.5% each year.
Gotcha.
Recently, it's been fairly successful. So they're raising more money now. About 2 quarters ago, they were raising money at about $6 million per month pace.
Okay.
Now they're up to $30 million per month.
So that's assets under management in this new fund. So we're getting $6 million a month, now up to 30 in terms of assets under
Right.
management.
So now on a run rate for at least, management said for at least a couple quarters they expect about $30 million a month on a run rate now, and that's really translated to more profitability for Main Street Capital shareholders, because originally management had forecast 2 to 3 cents in net investment income from this arrangement, and now they're saying 3 to 5 cents with the potential for more increases down the road.
So looking at the company's broader net investment income sitting just over $2 a share, you're talking about 5 cents. So some people might say, does that really move the needle? Is this something that can continue to get bigger and become a large part of the main business?
Right. So when I think about it, I think about the incentives. So there's a lot of financial advisors out there who are making a lot of money to sell this, and the way this is ramping, I would think that, yeah, it could be a big part of the business. You saw FS Investment Corp, which it started out as an non-traded BDC, and it quickly raised billions of dollars within 3 or 4 years. Now it went public. So there's almost like more room for this to bring in more private assets.
Gotcha. So maybe not huge today, but if we look in 6 months, a year from now, maybe a bigger percentage of the overall book at Main Street.
Right, and with no credit risk. So it's something you have to like too.
Interesting. All right, for Jordan Wathen, I'm David Hanson. Fool on.